To make money from Forex, you make money by predicting where price will go, right? You predict price is going up, so you buy. You buy means you're predicting price is going to go up. When price goes up, you make money, right? If you think price is going to go down, you sell. When price goes down, you make money. That is how you make money from the Forex market, right? It's that simple. But how do you know when price is going up or price is going down? How would you determine that? Like how would you best put yourself in a position to determine that and make money from the Forex market? That is where Forex analysis comes in. It forms the bulk of what you are going to be doing as a Forex trader. Analysis is key to your trading. It's what will help you determine trades to take and trades not to take. So, Forex analysis is the study of determining whether to buy, sell, or wait on trading a currency pair. Basically, it's that simple. So you're analyzing to determine something. What are you trying to determine? Am I going to buy? Am I going to sell? Am I going to wait on this currency pair? Right. Now, it's a practice of determining which currency within a pair is likely to be stronger over a given period of time. Then you can use this knowledge to purchase the currency that you expect to increase in value or to sell the currency you expect to decline in value. So basically, analysis helps you to look at a currency pair and look at whatever analysis you are using. You look at it and say, okay, now euro dollar, for example, right? Euro dollar, okay, from everything I'm seeing, all my analysis is pointing to the fact that the dollar is going to strengthen against the euro. That means the euro is going to weaken. That means the value of the euro is going to drop against the dollar. So I'm going to sell the euro. If I look and say, okay, Aussie Kiwi, I think the value of the Aussie is going to rise against that of Kiwi. I think I'm going to buy, right? You are doing analysis. Basically, it's that simple. Now, there are different forms of analysis in the Forex, right? There are different forms. Chief among them are two, right? You have technical analysis, fundamental analysis. Another one that can be an addition sometimes is sentimental analysis, but we won't go very deep into that for now. I'll just explain what it means, right? So fundamental analysis is a way of looking at the Forex market by analyzing economic, social, and political forces that may affect currency prices. We'll delve into that more deeply shortly, right? While technical analysis is a study of historical price action in order to identify patterns and determine probabilities of future movements in the market through the use of technical studies, indicators, and other analysis tools. We'll delve into that further. While sentimental analysis using sentiment is a process of identifying position of traders, whether net long or net short, to influence your own trading decisions in the currency market. So basically, this form of analysis, you are using the bias of currency of forex traders all over the world. You get data. The data is available, is widely available. You get data of, okay, how are people trading? Like on this particular pair now, what is the percentage of people that are buying? What is the percentage of people that are selling? You now use that to judge, okay, I think the market is moving towards this direction. I think the market is moving towards this direction. That's what sentimental analysis is about. So we start with fundamental analysis, right? Now, fundamental analysis involves speculating the movement of price based on the current and future economic outlook of a country, right? Now, a fundamental forex trader will analyze the country's inflation, trade balance, gross domestic product, growth in jobs, and even their central bank's benchmark interest rate. Now, if the economic outlook of the country is looking good, the demand for its currency will rise and its price will go up. Vice versa for bad economic outlook. Now, what is this saying? What this is saying basically is that with fundamental analysis, right, you are looking at the economics, the macroeconomics of a country and looking at how it's going to affect the currency, right? So the economic parameters that you might be interested in if you are doing this, things like the inflation, trade balance, gross domestic product, growth in jobs, interest rate, things like this, they affect the economy, right? Now, because they affect the economy, it is going to affect the currency of that country as well. Now, if you see that, for example, if you see that there has been an increase, say for example the US dollar, let's say the US dollar for example, let's say there is an interest rate announcement by the Federal Reserve Bank, right? And they say that okay, the interest rate has been increased, they've increased the interest rate. That means that that is a kind of, it's called an expansionary move in economics, but that's not what matters now. It is going to boost that currency. You are increasing the interest rate. That means you are attracting investors from other countries, foreign investors, to invest in the country because they know that once they invest in the country, the interest rate is high. So they put their money in that in the US dollar. So they buy more of the US dollar. So the value of the US dollar is going to obviously go up because of an increase in that interest rate. So if you see this and they've increased the interest rate, or the Federal Reserve Bank has increased the interest rate, that you know that that is going to have a bearing on the US dollar. So as a fundamental trader, what you want to do, you'll be looking to buy the US dollars across board. Like you can choose to buy the US dollar against whatever currency, in whatever currency pair that you're trading. You want to favor the US dollar because of that fundamental information that you have at your grasp. So that's what fundamental analysis basically has to do with. That's what fundamental analysis basically has to do with, right? Yeah. So to trade based on fundamental analysis, you will really need to be up to date with economic and geopolitical events and major news announcements, right? So you can keep an economic calendar. Now, economic calendars help you to know which events are coming up. They even tell you which events are um, high impact, low impact, and things like that. So you get to be abreast of what is going on, what new information is going to come out. Okay, when interest rates going to be announced. Okay, jobs information, farm payroll, non-farm payrolls, and things like that. Like you are going to be abreast of all that information. So as a fundamental trader, you will use it in your trading. Let me just try and show us an example of a forex calendar, right? Of a forex calendar. This is an example of a forex calendar, right? Now we are looking here, we are seeing different things. We are seeing dates right here, dates, and we are seeing some events here, right? So looking at this, you can see um, currencies listed here. This column is showing the currencies that the news is going to affect. This particular news item you see here is showing the currency is going to affect, and you can see some orange, some red, orange, red, orange, red. That is showing the level of importance of that news item. So this red means high impact, this orange means medium impact. So The high impact news item is going to have a large, it can have a very high impact on the currency, on the movement, on the movement of price of that currency. So using this, you want to stay abreast of what news is going to be released so that you can use that information in your trading as a fundamental trader. As a fundamental trader, basically, there are other ways to apply the forex calendar if you are not a fundamental trader, but all that will be for later, not in this course. I'm going to touch on that much later, not in this course, not in this course. Yeah, so that is fundamental analysis for now. Yeah, so so yeah, just some of the very key news events, high impact news events that can actually move prices of currencies, right? So you have gross domestic product, you have consumer price index, employment data, trade balance, industrial production, non-farm payroll, retail sales, producer price index, interest rates. All these things can actually move prices. So if you are abreast, if you are up to date with this information, you would get ahead in forex market. Sentimental analysis, we're not going to go too deep into that. It's just what you're just doing with sentimental analysis is you are speculating based on the general feel of the market about a particular currency pair. Basically, that's what you are doing. So you are speculating based on the general feel of the market. So based on the direction of the majority of traders on a particular pair, commonly used as a contrarian indicator. What this basically means is um, there's a school of thought that, okay, it is fact that based on the source you check, right, most forex traders lose money. Most retail forex traders lose money. A lot of retail forex traders lose money. Can be as high as the percentage can be as high as 80% on some sources, right? So that at up to like 80% of forex traders lose money. Like they are wrong. Up to like 80% of forex traders are usually wrong. So now imagine you use that, okay, you see where majority is heading, the direction majority is heading. Then you use that as a contrarian indicator. Contrarian meaning that you want to go the opposite direction. You want to go contrary to majority. So that if you are doing that, that is sentimental analysis. That is sentimental analysis, basically. So this is just showing um, what sentimental analysis basically looks like. So you see blue and red. You see a bar that is divided into blue and red here. So what this is just showing you is, if you look at this um, Aussie yen, Aussie yen pair, yeah, here you see 52, here you see 48. That's blue, you see blue, 52 blue, 48 red, right? 52 just means the percentage of traders that are going long. Going long means buying. So in forex, if you are long, it means you are buying. If you are short, it means you are selling, right? Long, buying, short, selling. So it's showing the percentage of forex traders that are long on the Aussie yen pair, right? So 52% of traders are long on the Aussie yen pair, 48% are short on the Aussie yen pair. So look at the Euro Swiss now. 82% of traders are long on the Euro Swiss, while 18% are short. So this one, it shows you that major like an overwhelming majority of traders think that the price of Euro Swiss will go up, that is the euro will appreciate in value against the Swiss. So majority of traders think that, right? So you can use this in sentimental analysis to guide your decision. Maybe you want to go, okay, if you want to go with majority, of course, the data is there for you to see. You want to go with majority, you also want to join along and buy, fine. If you now want to use it as a contrarian indicator, like, okay, majority of traders lose money, and you want to go against the crowd, you see 18% is a sell, right? There's more to applying this thing than what it is now, but for now, let's just understand it like this, right? Now, technical analysis. Technical analysis is going to form the bulk of what we'll be discussing in analysis. So let's break the video into parts again. So in the next video, we'll be talking about technical analysis.
Keep it low key, keep it softly spoken.